Three broad reasons why the equity in Tesla is worth zero. Number one, Tesla's financials are horrible and worsening even before massive competition begins arriving later this year. Number two, Tesla has no moat of any kind and in fact now possesses trailing technology in all facets of its business. And number three, a bet on Elon is a bet on someone who can't be trusted.
Hey, what's going on, guys? Tesla exploded in the last month while short sellers are going bankrupt. In this video, I will expose those short sellers and will explain why short selling isn't the game you want to play in the first place. First on the list is Mark Spiegel, the head of the small hedge fund. Let's take a look what he has to say about short selling and Tesla.
So the name of this presentation is Tesla is Still a Zero, and that's a play on a presentation I gave at the Robinhood conference in November 2016, which was called Tesla is a Zero. And when I gave that presentation, the stock was in the 180s, and around 6 months later, it was in the 380s, which is my way of saying that that's a better disclaimer even than this is. So, three broad reasons why the equity in Tesla is worth zero. Number one, Tesla's financials are horrible and worsening even before massive competition begins arriving later this year. Number two, Tesla has no moat of any kind and in fact now possesses trailing technology in all facets of its business. And by the way, I can go into the weeds on all of this stuff, so grab me anytime and I'll explain these things. And number three, a bet on Elon is a bet on someone who can't be trusted. He has a long track record of making hugely misleading statements. Q1 2018 GAAP loss, excluding ZEV credit sales, was $760 million. This is the report they did yesterday. That's a loss of over $25,000 per car sold. Now, this loss was not because Tesla is in quote-unquote growth mode. Porsche sells 2.5 times as many cars as Tesla and is a slow grower, and yet, if we adjust this should be Q1 Tesla GAAP loss, I forgot to change that last night, to Porsche's level of R&D, which is 9.9% of revenue, Tesla still would have lost over $24,000 a car, excluding ZEV sales. And the ZEV sales only made a difference of between 1,000 and 2,000 a car. So even on a GAAP basis, they lost that. Q1 2018 Model S and X sales were down double-digit percentages year over year. There's your hypergrowth. And sequentially, even before much nicer luxury EVs roll out from Jaguar, Audi, Mercedes, and Porsche later this year and next year. And what about the Model 3? We'll cover that later. So Tesla is now 15 years old. How's that profitability scale coming along? Let me give you a hint. 2009 is on the left. This is the quarter they reported yesterday, okay? Those are the losses.
Mark Spiegel placed very large bet against Tesla. Spiegel's fund lost more than $1 million from shorting Tesla, which he started doing back in 2014. Recently, he began cutting Tesla short position as Tesla stock explodes. He cut 20% of the fund to 10%, but Tesla continued to increase. Therefore, his Tesla position increased to 20% once again. So he cut again and again. What a wonderful method of losing money. In January 2020, he tweeted, "Tesla is now Bitcoin. Instead of being used by criminals, it's run by one. It's no longer a stock, it's trading sardine, completely detached from reality. It just took out yesterday's high and I slashed our 10% equity position to 5%. What an asshole! He says that Bitcoin is being used by criminals. Alright, what about US dollar? He also called Elon Musk a criminal. Obviously, his Tesla short position did not go as planned, but it was not the end. He did not stop right there. He also shorted Amazon in 2015. Here is his tweet. "I think Amazon is the second most overvalued mega cap after Tesla, and it's finally time to short it." Well, let's take a look how did it go. In 2015, one share of Amazon was trading around $400. 5 years later, Amazon increased by more than 400% or more than 5x. Clearly, Spiegel did not learn his lesson few years back and continues to making the same mistakes. According to Albert Einstein, the definition of insanity is doing the same thing over and over again and expecting different results. That guy is insane. I feel very bad for his investors who invested into his ego play fund. Let me give you a piece of advice, Big L. If you find yourself in a big hole, do not try to dig a deeper one. Try to get out of the hole as soon as possible. Here is another Tesla short seller, Jimbo Chanos, a portfolio manager at Kinnikos Associate. Let's see what he has to say about short selling Tesla.
Well, Tesla's actually been an okay short relative to this market. I mean, it's gone nowhere in 4 years.
Hey, back this up. How long have you been short Tesla?
So we've been short it 4 years. Yeah. So this stock, as the market has kept moving higher, was in the high 200s in 2014. It's been volatile, but it really hasn't made any progress. So that's one interesting little observation. Number two, when we started shorting Tesla, the 2020 earnings estimate was $20 a share. It's now down to about $4 or $5 a share. So the problem is that this has been pushed out and pushed out and pushed out. But the bigger problem is that Porsche's coming.
How expensive? Sorry.
Hold on, say that again. You think
Porsche's coming?
With their own car.
Porsche's coming with the Mission E, and
so is Jaguar with the I-Pace.
And so is Audi with the e-tron. And these are amazing looking cars. And what Tesla did was made EVs sexy. Mm-hmm. And I've always said that. Elon got the Model S out.
Electric vehicles.
Right, electric vehicles. But the Model S is 7 years old. And now the big boys are coming. And they're coming with sexy looking cars at the same price point with better features, faster cars, great styling. And so what was unique for Tesla is no longer unique.
Okay, so, but then the question is, when does the market decide they're no longer going to provide capital under this business model, which is we provide you capital for this long-term thing that we think is going to happen? When does that? What's the tipping point?
I have no idea. It should. At some point, investors are going to see the capital as being incinerated, right? I mean, they're just providing capital, and he has to come back to market and providing capital, and it's gone. At some point.
And you don't think there's any point where you look and is there anything encouraging where you've said, you know what, maybe they're getting finally closer to a turning point here?
I think actually it's getting worse. They talked about being a leader in autopilot. They're now a laggard in autopilot. Their technology is behind everybody else's. They're selling.
Behind who?
They're behind GM, for example, who's going to be on the show shortly. We can talk to GM about that. The Cruise technology is well ahead of Tesla's.
Did he really say that big boy's about to step in and push Tesla aside? Porsche Taycan EV, kind of ugly looking car, a starting price of $160,000 apparently will make Tesla drop all the way to zero. That's not all. He also said in 2017 that Elon Musk, as the CEO of Tesla, would step down from his position by 2020, and he also said that Tesla would go bankrupt. Since he opened his short position on Tesla in 2014 when Tesla was slightly over $200. According to some resources, he was holding around 2% shorts on Tesla of his total portfolio. Since then, Tesla price is more than triple, therefore his portfolio short increased up to 7%. As of yet, Chanson still hasn't covered his Tesla short position and isn't planning to do so anytime soon because he believes that Tesla is going to go bankrupt eventually. Let's take a quick look how Jimbo performed as an investment manager for the past few years. Well, his performance is not something you can brag about, that's for sure. Actually, it's kind of embarrassing. Since 2012, well-diversified index funds such as S&P 500 was up 150%, while Jimbo's portfolio increased by only 74%, which indicated by this blue dotted line. Another epic fail by trying to be a media hero, and now he dodges all the media interviews. Here is another Tesla short seller, David Einhorn, and probably the richest of them all. Let's take a look what he has to say about short selling Tesla.
Greenlight Capital's David Einhorn knocking Tesla today in a letter to investors, comparing it to the now bankrupt Lehman Brothers and saying the quote, "Deception is about to catch up to them." He writes, Lehman threatened short sellers, refused to raise capital, it even bought back stock, and management publicly suggested it would go private. Months later, shareholders, creditors, employees, and the global economy paid a big price. when management's reckless behavior led to bankruptcy. Is David Einhorn right? Joining us to discuss is Gabe Hoffman from Accipiter Capital Management, who's currently short Tesla, and Ross Gerber from Gerber Kawasaki, who is a Tesla shareholder. Gentlemen, great to have you both with us. Gabe, let me start with you. I guess you agree with this take from David Einhorn.
Absolutely. I've been saying for some time that I believe Tesla is currently on the verge of a financial crisis and will go bankrupt. Specifically, let's look at what Tesla's suppliers are saying, because they know more in the real world than even we do. And specifically, I'm talking about the credit default swap market. It's showing an 18% chance that Tesla goes bankrupt in 2 years. Compare that to 1% of Ford and General Motors. Tesla's suppliers are owed $3 billion in accounts payable as of June 30th. That's been ballooning. And compare that to only $1.3 billion of actual Tesla cash, not customer deposits, which is a worse quick or current financial ratio than General Motors was just before it declared bankruptcy.
Ross, I can imagine that you probably feel differently. I know that you are long Tesla shares. Why do you think Tesla is very, very different from Lehman Brothers?
Well, first of all, David Einhorn has the most absurdly poor results of any manager of money over the last 5 years that exists today. His fund's been decimated. He's actually a lot more like Lehman Brothers than anybody else. So I feel bad for him, and his shareholders down 25% this year. We started a fund at our firm called the Opposite Einhorn Fund, where we just do exactly opposite of what he does. And it's worked amazingly. So that fund's up 25% on the year. But that being said, if JCPenney and Sears are somehow still not bankrupt, my least concern is Tesla, when their revenue is about to double to $6 billion for the quarter, and they're about to be cash flow positive.
I think the business models are pretty different. Those are very different business models. JCPenney,
it's not about
Sears,
business
and Tesla
model.
Here.
The fact that these companies have been struggling for so long and managed to still find capital and stay in business is a miracle. So a vibrant, fast-growing growth story that has one of the most amazing products ever created, in doubling revenue.
Ross.
I mean, how many companies are like that?
This was hilarious. Just do the opposite of what David Einhorn does, and you will succeed. Forbes named David Einhorn as the youngest self-unmade billionaire. Wow, it must be very honorable. His fund asset at Greenlight dropped by more than 2/3, from $6.3 billion at start of 2018 to $1.6 billion at the current time. His net worth dropped from over $1 billion to $700 million as of the late 2019. Since Tesla more than doubled ever since, his net worth is probably dropped between $400 to $500 million. Let's take a look at his investment performance. Well, he has 2 stars average reviews, with over $1.6 billion under management. Since 2012, S&P 500 increased by more than 160%, while Greenlight Capital increased by more than 64%. His performance is even worse than Jimbo's. I feel like it's getting worse and worse. The next one is on the list is Alexander Ropers. Let's take a look what he has to say about shorting Tesla.
Now, we are following Tesla. I have experience myself with automotive manufacturing as an investor, but also as a director of a car company at one point. And I must say the biggest issue with Tesla, if you just step away from it's a cult stock or technology, anything. There's one factory, Fremont, California, that made 400,000 cars under the capable ownership of GM and Toyota. Under 7 or 8 years of Tesla ownership, they've gotten up to maybe 100, 150,000, 200,000 cars. It doesn't matter. The max performance of that factory is 400,000. In fact, they're doing it in tens right now. And the next factory they're talking about will take 3, let's say 5 years to build and to get up to speed at least. So you're basically running into a brick wall in terms of producing cars at 400,000 at the most. And so how can you justify $64 billion market cap, which is then basically the cult stock factor, which, you know, time is ticking on that one.
Alexander, the founder and portfolio manager of Atlantic Investment Management. His portfolio value decreased from $1.1 billion to $285 million in late 2019. That's more than 70% drop in asset under management, either due to investors leaving him or his poor performance. Well, his performance is definitely worse than Jimbo's and Einhorn. I do not even know how he still has $285 million under management with all that poor performance. Since 2013, his portfolio dropped by 24%. Feel bad for his investors. The last short seller for today is Gordon Johnson. Let's take a look what he has to say.
Right. So Elon Musk in February of 2019 said that Tesla was going to deliver 420 to 600,000 cars. The number came in at 367.5. If you look at Europe as of over the first 29 days of 1Q20 versus the first 29 days of 4Q19, sales in Norway, Netherlands, Spain are down 40%. That's over 50% of their demand in Europe. U.S. sales last year, total Tesla cars sold fell 3%. Model 3 cars in the fourth quarter fell 32% year over year. And you have a pandemic breakout in China, the likes of which we've never seen, which is going to significantly dent their ability to sell cars in China. And then lastly, back to Europe, they're building a factory to make 500,000 cars. And they only have 8,000 cars in transit on boats to basically Europe, China, and South Korea. The same number over the same amount of days last quarter was 23,000, 63% fall. I think they have a big demand problem. I think numbers tonight are okay, but I think you're going to have a lot of one-time items like FSD revenue recognition, credit sales, et cetera. And I think they have a disaster of a year in 2020 ahead of them. And I think you're going to hear some of that tonight when they talk about 1Q.
Yeah, I'm chuckling to myself because I've seen Gordon pound the table on his $90 price target for years and just be dead wrong. In the past 5 quarters, in the past 6 quarters, 5 of them, Tesla's produced positive free cash flow, which used to be the short selling argument. They're going to report 4 out of 6 quarters of positive earnings when they do Q4. Deliveries were up 50% this year overall. I think it's really easy to cherry pick certain numbers, but the truth is the financial success of Tesla is actually catching up to the market. The reason why the stock is soaring is because they validated their business model. They've proven they can make earnings, positive free cash flow while growing 50% in an auto market that's stagnant. They're outselling all of their competition. Volkswagen CEO, Porsche CEO, they were all saying Tesla's a joke. Now they're trying to copy them as fast as possible. I think it's just becoming clearer and clear that the disruption in the auto industry is being led by Tesla, and this is a multi-year growth story in the making. And 2019 was really the year where they've proven that their business is not only successful from a product standpoint, but financially viable as well. And that is why I think shares are going to continue soaring. They may pull back a little because they've run up so much into earnings, but I think the long-term story has never looked brighter and stronger. And people like Gordon have never been proven wrong more and more times again in a row.
Wall Street's bigger Tesla bear, researcher Gordon Johnson, reiterated his sell rating and lowering his price target from $100 to $54. Wow, that's so precise. While Tesla reaches over $900, he continues to dig deeper and deeper hole. I'm actually glad he's not an investment manager, but just some lousy analyst. Otherwise, more investors would lose big money. So, here's a few things to learn, kids. Yes, Tesla, Netflix, maybe even Amazon could be overvalued. But being overvalued does not mean it will drop tomorrow. In addition to all that, short selling is just simply stupid. The best of what you can do is gain 100% if company that you are short selling will go bankrupt. But if it won't go bankrupt but increases just like Tesla did, your losses is unlimited. So if you're satisfied with that risk-reward parity, you should not be in investment business after all. Another lesson is to learn is all those ego play from short sellers. You should not announce your investment publicly, because if you do, it will be harder to get out, since you do not want to be proven wrong. In the end, in investment business, we are here to make money and not to be proven right. So stop digging in deeper holes if you are already in one. Let me know what do you guys think about those pathetic short sellers. Leave your thoughts in the comment section below, hit that like button and subscribe.